Hi, this was an example of scaling and trailing in the EuroFX future from December 2011 on non-farm payroll report day. Now, we'll be using a 3-exit strategy with 2 fixed targets that have already been defined here and here, and using a trailing stop based on ATR to either take us out fully or after the fixed target number 2 has been reached to take out our 3rd scale. Now, as you can see, earlier on in the day before the report there'd been a move up and we'd come into some consolidation just before the release. So we can see that the top of the range at 35.51 and the bottom at 35.22 were going to be potentially key extremities for any retest post the report. We can see just above here that we have 2 levels to form a band of a technical area that I had in place at that time as well. So that just gives further confirmation for entry. So going forward post the report, we can see that there was a spike higher, and then we broke out of that consolidation range. Now immediately I'd be thinking, hang on a second, okay, well if it spiked higher then there are some people caught long and we're likely to reverse at least a little bit. Fixed target 1 is at 34.78. 35.22 is the bottom of that range, so if we can get in at 35.20, if it comes back with a reasonable ATR trailing stop 2 ticks beyond that, we'd be looking for probably something in the region of 3-4 to 1 risk reward ratio, or 1 to 3 or 1 to 4 risk reward ratio. Okay, so it doesn't quite get there, and we've got 35.38 for the ATR right now, so that's looking at it's going to be 18 ticks for a stop at that point, but it's actually coming down, and as we move back towards a test of that lower end of the balance range from earlier, it's coming at 35.33, so the stop would end up being at 35.35 and looking to enter at 35.20. So we finally get it, and actually the ATR has moved down 1, so 35.34 is our stop. Fixed target 1 at 34.78, fixed target 2 at 34.25. So I'll just fast forward it here a bit. We get the first target. Now at this point it's important to note what the average on the trade is, because we've taken some profit. We've actually taken 42 on a third of the trade, so 42 ticks between the 2 remaining trades is 21 each, so the average short now is at 35.41, which is well above where we originally entered. Stops at currently at 34.99, which you might have it slightly above at 135 even. Either way, we did move back up, and it touched it actually to the tick, so we didn't get stopped out there. So I'll fast forward it again, and you can see that it nearly got the fixed target to initially, but then it did. So at this point we've got a average of 1 short for another 116 ticks on that scale, from 134 134.41, and we're now looking at an average of 1 short at 136.57. So you can see we're well in the money on the trade. Risk is very, very little on the remaining lot, and finally, after a long time, we do actually get taken out at 134.13, 2 ticks above the ATR stop. So that's an example of how to scale and trail a trade. I hope you enjoyed it.